This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we speak about Chutzpah, or unmitigated gall, where a STOLI fraudster claims hardship because he is confined in his apartment in Upper East Side of New York, and seeks release from home confinement in that luxury apartment. Insurance fraud is and always will be a serious crime, especially when it takes advantage of the elderly to defraud insurers in a Stranger Originated Life Insurance scheme, or a STOLI. In United States of America versus Michael Binday, the USDC for the Southern District of New York on November 4, 2024, dealt with the fact that the defendant, Mr. Binday, continued to use the wealth he gained from his fraud to impose on the courts of the United States with frivolous and unfounded motions, the last of which was seeking release from his confinement. He was sentenced to 144 months of imprisonment after being found guilty of conspiracy to commit mail and wire fraud as well as actual mail and wire fraud. The evidence at trial established that Binday led his codefendants in a scheme disguised to procure stranger-oriented life insurance policies on the lives of seniors for the benefit of investors who were strangers to them by means of fraudulent life insurance applications. Binday spent the first 5 years of his sentence at federal prison in Otisville, but in September of 2021, during the height of the COVID-19 pandemic, the Bureau of Prisons released Binday to serve his sentence on home confinement. Thus, Binday has spent the last 3+ years serving his sentence in his luxury apartment on the Upper West Side of Manhattan. His sentence is scheduled to end on September 20 of 2025. Binday filed his latest motion for compassionate release and a motion pursuant to Rule 60B of the Federal Rules of Civil Procedure, seeking to vacate the judgment of his court dated May 23, 2018, denying his first petition of many. Michael Binday and his 2 co-defendants, James Kurgel and Mark Resnick, were found guilty of conspiracy to commit mail fraud and wire fraud in connection with a scheme to defraud insurance companies which the defendants purported to serve as agents. Binday led his co-defendants in a scheme to procure STOLI policies on the lives of seniors for the benefit of investors who were strangers to them by means of fraudulent applications, and over the course of their scheme, the defendants submitted at least 92 fraudulent applications, resulting in the issuance of 74 policies with a total face value of over $100 million. The policies generated roughly $11.7 million in commissions to Binday and his co-conspirators who were pretending or acting as life insurance agents. Binday was eventually sentenced to 144 months of imprisonment. He surrendered to the prison on July 1, 2016 to commence his term of imprisonment, and immediately filed motions for compassionate release, reversal of the convictions, and multiple other motions. And on July 1, 2024, Binday, who is serving his sentence in his high-priced apartment, filed a renewed motion for compassionate release. As a threshold matter, the court noted that it is worth emphasizing that Binday is not asking to be released from prison, but rather to be relieved of the inconveniences associated with the rules of home confinement. He has served at least 38 months in his apartment. Not all of what the court intended when he was sentenced. How much more inconvenient it would be if he were back at Otisville, where the court intended that he would serve his sentence. Binday's crimes were serious. As the court explained when he was sentenced to 144 months in prison, venality, rampant mendacity, the creation of false documents, obstruction of efforts by the victims to ascertain the truth, obstruction of regulators, and the government's effort to learn the truth. Binday's actions were precisely the sort of criminality that has left large segments of our society convinced that all businessmen are crooks. Insurance fraud may not qualify as a crime of violence within the meaning of the federal sentencing system, and that, the court believes, was unfortunate, is why all too often insurance fraud perpetrators are punished not with the severity that they deserve. As it is, Binday's home confinement means that he is subject to far less stringent conditions than he would otherwise. In that regard, he got more of a break than he deserved. And therefore, the trial court, the United States District Court, ruled that the motion for compassionate release was denied, and he must serve out the full amount of his sentence. In my opinion, STOLI fraud is a type of fraud on insurers that affects the straw buyers as well as the insurers, usually older men and women who have no need for life insurance. It is truly an act that deserves serious punishment. Binday stole millions from insurers, owns a luxury apartment in the Upper West Side of New York, and wants to be released from the confinement when he should have stayed in federal prison. He has abused the courts with his multiple motions and appeals and will serve out the remainder of his sentence, and the Department of Justice and the FBI should look into his current conduct, since there is, in my opinion, the possibility that he is funding his attorney's fees with more fraud of different types. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. You can subscribe to the blog, and if you do, you'll receive notice of every blog posting, usually 5 or 6 a week. And you'll also gain access to the more than 4,900 blog postings. You can also subscribe to these videos on rumble.com or youtube.com. They're all free, as is the blog. And if you do, I'd appreciate it if you click on the like button on YouTube and the thumbs up button on rumble.com. And if you're interested in further detail about insurance, insurance fraud, insurance claims, and insurance law, please consider, for a very small fee, subscribing to my Substack publication. Thank you for your attention.